Hey traders, Raghi here. We're going to talk about this morning's trades and talk about some of the environment that we were trading today. Now, one thing that admittedly I probably get a little guff about is the frequency with which I will mention that a particular day is what I call a caution day. Not a very original name, but here's the meaning. There are certain events that are on the economic calendar that tell us that we are very likely to move rapidly, so a lot of speed, not necessarily velocity. What's the difference? Well, for me, speed can be basically just this, right? Velocity is that. Velocity is that. So this is a problem sometimes, that kind of speed. Really not covering a lot of ground, but it's just very quick. Now, we know we could see a lot of that kind of action, a lot of quick trading, a lot of unpredictable volatility when, of course, we have Fed Chair Powell. We had kicked the morning off with a lot of optimism because the core retail sales came in at a level where there was a nice surge. I mean, look, it's plus 18%, I believe, 17.7 to the upside, but still. Now, here's another tip. Whenever you're looking at data, look at it from a rate of change standpoint. Is the 7.9 consensus forecast lower than the expected? I mean, was this a good number? Well, good is relative to what? Well, this is good relative to the fact that the expectations were just under 8% and we printed just under 18. Well, that's good. The way that I was taught to look at data, however, is on a rate of change basis. A rate of change basis. What that means is I'm not looking at what did we expect and what did we get. I'm looking at where have we been, where is typical retail sales and what's the average that we typically see. And if you take a look at the numbers inside that data point, and it's easier to do on something like tradingeconomics.com. I think Forex Factory is great for a great glance of the calendar. Trading Economics is much better when you want a deeper look than, say, financial media is going to give you. So what you'll know is that the overall direction of this, the direction of the overall movement is great, but it's still well below pre-quarantine levels. So it's a beat on the headline, but it's still, from a rate of change basis, still pretty disappointing. Doesn't matter. The market loved it, moved higher. And then here we have Jerome Powell. Now, Jerome Powell is very often a rally to the point until he opens his mouth. But that's not always been Powell lately. A lot of times Powell will continue to trigger the market higher. So this idea that Jerome Powell is a bear, is a seller's best friend, is not necessarily probabilistically true any longer. We've seen that after he's done talking, the market can surge, and sometimes while he's talking, the market can chop and or surge. It doesn't have to sell off, but today it did do sort of the more higher expectation thing, which is he opens his mouth, the market sells off. Go figure. So that's what we had. But for those of you that have been following me for a while, you know that on Wednesday I made a shift to across the board a buy-only bias. And that included Thursday. Thursday was actually just an opportunity to set up buys for yesterday. Now, if we take a look at our V-score reading, we take a look at this 7 a.m. anchor. Knowing how to use the V-score it's a talent that's completely separate from simply having a V-score. And this is a really nice anchor for day trading, the 1-minute chart, where you can see here. Now, if anything, and by the time Jerome Powell basically blasted the typical price movement range outside of its norm, I basically hit the pause on the market. But what I did was I held on to some of the calls that I had bought, and that was pretty much what I communicated to members. And I got stopped out of my futures contracts and we kept a very tight stop on these. But I'll tell you this. If I were willing and I thought this market could hold that V-score, you can see how the rest of the day transpired. So if you're not using a volume-derived tool to look at where size is stepping in and giving you a volume-derived support level, you're really missing out. It gave me, this may not have given me enough confidence today to be a buyer amidst kind of a pretty rapid sell-off. Again, I'm looking at the expected price movement ranges, daily price movement ranges. Caution days tend to just absolutely obliterate these sort of typical moves that we would expect to see. And once we move outside of historical probability, it's really tough to put a measuring stick to the market. But we had an alternative measuring stick and we have an alternative tool. Futures traders, when you understand those volume-derived support and resistance levels, if you have calls in the market, really interesting that, yeah, it kind of meandered for a while, but overall, one of the things that I mentioned to the traders is I will be absolutely 0% surprised if we're up back in the clearing range or even back at the clearing range high by the end of the day. So on one hand, the conservative trade absolutely would have been playing that -3 or just below that -3 V-score, which is what we ended up pushing down to shortly after our anchor woke our indicator back up. Retested that down here. Notice that the V-score has nothing to do with price. That's another thing that blows people away. That was a -2. I'm sorry, -3. That's a -3 right in here. Okay? So I don't want anybody thinking it was an easy peasy trade. It was not at all, which is why at some point I said, look, I'm positioned in the market in a way that I think I'm lining up with this, but the volatility is so much bigger, I'm fine with letting it go. So sort of the moral of this story is what? How I'm measuring it, why I'm measuring it, the caution day, how I understand when we're moving beyond normal price movement range, and how I decide that it's time to just take my medicine and call it a day and allow my calls to help me out. And those call options that I bought actually did all right. Not great, but they sure did help make up for the loss in the early morning, the small losses that we took. And I had a minorly positive day. Not a great day, but I think overall to walk away fairly unscathed on a day like today, I'm pretty excited about that. So think about the different tools you can use. Think about using derivatives if that's going to help you sit through much noisier markets. Look, it might look like this was an easy peasy buy at this level right there, but it sure wasn't, because notice that this is where we were at with the -2 V-score, not down here. I know it looks tricky, but I'm trying to tell you here, it would be really easy for me to say, oh yeah, we just bought this. But the difference between here and here was 80 NASDAQ points, just over 80. So having something that gives you a little bit more of a safety net is so important. Think about on caution days, this is something that we sent out with the alerts, using the options. And a lot of those members who did email me and said, Rog, it made the difference between getting stopped out of the futures and being done for the day versus having those options, taking some heat, but realizing I know absolutely the risk of my limit is whatever I paid for those options. And we'll go into the detail about which expiration and strikes and so forth. But think about the asset class. Think about why today would have been a good day to do that. Even though we're futures traders, gang, futures on options, futures on the alternative ETF, really a helpful alternative. Hope that helps, and I'll see you in the next update.